Investing in penny stock is somewhat controversial. This strategy is loved by traders and speculators, but disdained by serious-minded institutional investors, simply because of the risk involved. And in this video, I want to highlight the risk, the hidden danger of investing in penny stocks. That's what every investor should know. Penny stock investing is can be enticing because of the potentials for higher returns, but it comes with a significant risk and drawback. And so here are the risks attached to penny stock investing. Number one is high volatility. These are price swings. Penny stocks often experience significant price fluctuation, which can lead to large losses as well as large gains. There's also that market sentiment. Price can be highly influenced by market sentiments rather than company fundamentals. Number two is low liquidity. When it comes to trading volume, you discover that there's that low trading volume often associated, with penny stocks. That difficulties in buying, shares in sufficient number, and even in selling without, affecting the price of the stock. If you buy a large quantity, it might cause the stocks to skyrocket, to spike. If you sell in large quantity, it might equally, force the stocks to plummet. There is that particular, bid and ask spread. In this case, discover that there's a wider bid and ask spread, which can result in higher transaction costs. Bid and ask spread is essentially means, the buy and sell price, bid and ask, buy and sell price. And so the spread between is the difference between, the figure at the top of the bid column and the figure at the top of the ask column. So the differences constitute the buy and sell spread or the bid and ask spread. So in the case of penny stocks, the spread is always generally wider compared to large cap stocks. Number three is lack of transparency. There's that information availability is somewhat less available, because usually when it comes to penny stock getting listed in the exchange, the listing rules requirement is kind of lowered, is kind of not as stringent as what is expected, should in case it's expected from a company listing in a larger, more famous exchange like the New York Stock Exchange. So this tends to limit the information you could naturally obtain from these penny stocks, smaller companies. And not only that, you have, when it comes to due diligence, it's harder to conduct thorough research on these stocks. It's difficult because of the paucity of information, that you could get from these companies. Number four is higher risk of fraud. Higher risk of fraud. You come across the popular pump and dump scheme, susceptible to manipulative schemes where prices are artificially inflated and then sold off by fraudsters. When you buy at that particular higher price, you get duped, because eventually they'll sell it off, the stock will plummet, and you lose your money. You probably have scams, increased risk of encountering fraudulent companies, or, or misleading information. You have a higher level of scam, fraudulent information, misleading information, you know, fraudulent practices in this particular sphere of investing. Number five is limited regulation. When it comes to market listing, as I told us earlier, these are often traded, on less regulated exchanges or over the counter market with lower standards of disclosure. They're not really expected to disclose so much about the company compared to if the companies were listed, in a more established, recognized, or bigger exchanges. You have the risk of oversight. In this case, there's a kind of reduced regulatory oversight over penny stocks. They are not as highly regulated or monitored or supervised, like what is obtainable in bigger caps, larger cap, mega cap companies. And so that oversight is somewhat limited, which could increase the risk of unethical practices. You equally have number six, financial stability. Because of the size of the company, they are usually smaller in sizes, and you discover that for this kind of size, the companies tend to be less stable. They are not fully established. The fundamentals are not all that solid, compared to bigger cap stocks. And equally have business risk attached to these kind of companies. Higher risks of business failure or poor performing impacts or poor performance will certainly impact the stock values, the value of the stock. Number seven is speculative nature. When it comes to penny stocks, they have that speculative nature. They are loved and appreciated by speculators and traders, and of course they are avoided by big institutional investors. So it's often driven by speculation rather than solid investment analysis or business information. The price movements are essentially driven by speculation rather than by fundamentals or business performance. And not only that, there's that unpredictable returns. The speculative nature means potentials for higher returns, but also risk of there's that significant risk of losing your money. And so the entire environment surrounding penny stocks are kind of speculative. You could make an outsized gain, and you can equally, record an outsized losses. And number eight is emotional investing. Emotional investing here, there's this is where investor behavior comes into play. So high volatility can lead to emotional decision making, such as panic selling or chasing losses because of uh, you know widespread speculation. One could be kind of forced into taking making emotional decisions as regards the penny stock you're invested in, and it might lead to losses in as much as it can equally lead to gains depending on how lucky you are. This that stress is stress inducing. The speculative and risky nature can cause stress, and it can lead to poor investment decision. It's speculative in nature, it fluctuates a lot, and this might induce stress, you know, amongst the people who are investing in this kind of stocks. And so investing in penny stocks comes with substantial risk, including high volatility, low liquidity, lack of transparency, and a high likelihood of encountering, fraudulent schemes. And so investors should approach penny stocks with caution, conducting thorough research, and be prepared for the potential pitfalls associated with this high risk investing, please subscribe to this channel if you've not done that, and give this particular video a thumbs up. So, should you be involved in penny stock investing? The answer here is it all depends on your nature. If you have the risk tolerance, good and fine, you could invest in it. But if not, I think I would advise you don't, because at the end of the day, you may end up losing your money as a result.